Welcome to Stories of Traders, the ultimate destination for captivating narratives from the dynamic world of finance. Join us as we dive into the riveting experiences of individuals navigating the markets, unraveling the highs, lows, and invaluable lessons that shape their journeys. Whether you're an aspiring trader or a seasoned investor, get ready for a front-row seat to the real stories behind the financial charts. Don't forget to hit that like button, share these stories with your fellow enthusiasts, and of course, subscribe to stay updated on our latest tales from the trading floor. Comment, "I subscribed," to receive a personal thank you. Let the journey into the captivating world of trading begin. Welcome to Stories of Traders, the ultimate destination for captivating narratives from the dynamic world of finance. Join us as we dive into the riveting experiences of individuals navigating the markets, unraveling the highs, lows, and invaluable lessons that shape their journeys. Whether you're an aspiring trader or a seasoned investor, get ready for a front-row seat to the real stories behind the financial charts. Don't forget to hit that like button, share these stories with your fellow enthusiasts, and of course, subscribe to stay updated on our latest tales from the trading floor. Comment, "I subscribed," to receive a personal thank you. Let the journey into the captivating world of trading begin. The billion-dollar scam of Sam Bankman-Fried. In the ever-evolving world of cryptocurrency, there are figures whose names resonate across trading desks and blockchain networks. One such figure is Sam Bankman-Fried. Beyond the headlines, beyond the trading terminals, who is this enigmatic personality? Today, we embark on a journey to uncover the multifaceted layers of Sam Bankman-Fried's life. Early life. Sam Bankman-Fried, born on March 5, 1992, in Stanford, California, grew up in an academic family. His parents, Barbara Fried and Joseph Bankman, were professors at Stanford Law School, and his aunt, Linda P. Fried, serves as the Dean of Columbia University Mailman School of Public Health. With this intellectual backdrop, Bankman-Fried attended Canada-USA Math Camp during high school, showcasing an early interest in mathematics. He continued his education at Crystal Springs Upland School in Hillsborough, California, before embarking on his journey at the Massachusetts Institute of Technology, MIT. Graduating in 2014 with a bachelor's degree in physics and a minor in mathematics, his time at MIT, including living in the coeducational group house Epsilon Theta, laid the foundation for his future endeavors in the world of cryptocurrency and finance. While pursuing his studies at MIT, Sam Bankman-Fried became involved in effective altruism, a philosophical movement inspired by thinkers like Peter Singer. A philosophical movement fueled by the idea that if you're fortunate enough to accumulate wealth, it's not just about hoarding it for yourself. It's about using that wealth to make a positive impact on the world. Influenced by a lunch meeting with a foundational thinker of the movement, an Oxford doctoral student in his mid-20s, Bankman-Fried decided to harness his mathematical aptitude for philanthropic purposes. After graduating, he joined Jane Street Capital, LLC, a quantitative trading firm, where he applied his skills in trading equities and exchange-traded funds, ETFs. Entry into the world of crypto. While many only know him from FTX, it wasn't his first venture in the field. In 2017, Fried left Jane Street and briefly worked at the Center for Effective Altruism. During this time, he utilized arbitrage strategies, learned from his trading experience to maximize his earnings. This marked the beginning of his foray into the world of cryptocurrency. Capitalizing on the high volatility of Bitcoin and the limited regulatory framework of digital assets, he began trading the cryptocurrency, recognizing its potential for substantial returns. In the same year, Bankman-Fried co-founded Alameda Research LLC, a quantitative trading firm specializing in digital assets arbitrage. Within a few months, The company achieved remarkable success, occasionally making profits of up to $1 million a day. The FTX launch and success. In 2019, Sam Bankman-Fried ventured into new territory by establishing FTX Trading Ltd., a cryptocurrency derivatives platform designed to attract ongoing investment. The uniqueness of the exchange laid in its native token, aptly named FTX token, FTT. Offering discounts to users who engaged in trades using FTT, the platform incentivized participation, while Alameda Research, under Fried's direction, strategically positioned itself as one of the largest holders of FTT. This move allowed the firm to act as the token's market maker, ensuring stability and facilitating its eventual introduction to the broader market. Bankman-Fried envisioned a comprehensive approach, combining the roles of exchange, broker, and market maker to achieve maximum efficiency, a unified risk perspective, and real-time clearing and settlement. As the decade unfolded, Bankman-Fried not only became a prominent figure in the cryptocurrency scene, but also solidified his status as a formidable donor. By 2020, he had attained billionaire status and began channeling substantial funds into U.S. political campaigns, notably contributing millions to Joe Biden's presidential campaign that year. In the 2022 midterm election cycle, Bankman emerged as the second-largest individual donor to Democratic campaigns. However, his philanthropic endeavors reflected a distinctive approach. He favored projects with potential long-term benefits for humanity, such as pandemic preparedness, over immediate relief measures like providing mosquito nets to prevent malaria. In fact, in 2021, he stood tall among the Forbes 30 Under 30, a recognition of his significant contributions to the cryptocurrency industry. However, the tides turned, and by 2023, he found himself on Forbes' Hall of Shame list, a collection of 10 picks the publication wished it could retract. This shift speaks volumes about the complexities and polarities that define his narrative. On December 8, 2021, Bankman-Fried, alongside industry peers, testified before the Committee on Financial Services, shedding light on the need to regulate the ever-evolving cryptocurrency industry. This showcased his willingness to engage with regulatory bodies and contribute to shaping the future of the financial landscape. Fast forward to May 12, 2022, Emergent Fidelity Technologies landed. A company majority-owned by Bankman-Fried made headlines by acquiring 7.6% of Robinhood Markets stock. However, in a twist revealed in a November 2022 affidavit before the Eastern Caribbean Supreme Court, Bankman-Fried disclosed that he and FTX co-founder Gary Wang had borrowed over $546 million from Alameda Research to finance this acquisition. This revelation added a layer of financial intricacy to his story. In an unexpected turn, Fried's advisors extended an offer to help fund Elon Musk's potential purchase of Twitter in September 2022. While no investment transpired during Musk's acquisition, the court documents revealed that Bankman was willing to commit up to $5 billion. He also made substantial investments, injecting $500 million into Philanthropy and over $500 million into various venture capital firms, including $200 million in Sequoia Capital, an investor in FTX. Sequoia initially published a glowing profile of Bankman-Fried, later removing it after FTX's solvency crisis, showcasing the volatile nature of his business ventures. July 2023 brought forth unusual allegations that Bankman-Fried had considered purchasing the island country of Nauru, intending to use it as a bunker in case of an apocalyptic event. Described as a misguided and sometimes dystopian project, this revelation added a surreal dimension to Bankman-Fried's public image.
Before we continue, we have an ad break.
Welcome to Surge Trader, where profitable traders can capitalize on their skills and amplify their returns with a real money funded trader account. We built the Surge Trader program on 3 pillars. 1. simple trading rules. 2. No time limits. And 3. Fast, responsive service. Here's how it works. Take a one-step audition, and once you achieve a 10% profit target, you receive a funded account, up to $1 million. You keep up to 90% of your profits, which you can withdraw anytime. There are only 2 simple trading rules: a daily loss limit of 5%, and a maximum trailing drawdown of 8% that locks in at your starting balance as your account grows. Tradable instruments include FX pairs, indices, stocks, metals, oil, and over 250 cryptocurrencies. Surge Trader accelerates trader funding and helps profitable traders with their biggest challenge: undercapitalization. Our approach is long-term. We profit when you profit. When you win, we all win.
Diamond hands, bro. It's just fun.
Hey, it's just a dim. It'll go up.
Take a deep breath and huddle.
Gussie's on the rise, read all about it.
And then he said, I'm freshly minted.
Let's continue the story.
The FTX crash. But why did the year 2022 come crashing on him? Binance CEO Changpeng Zhao ignited a storm on Twitter, announcing the firm's intention to sell its substantial holdings of FTT, FTX's native token. The revelation, following reports of Alameda's significant FTT holdings, triggered concerns about the token's price due to its low trading volume. In a surprising move on November 8th, Zhao declared that Binance had entered a non-binding agreement to acquire FTX, citing a liquidity crisis at FTX. However, this news led to a drastic 80% drop in FTT's value on the day of the announcement. Just a day later, Binance reneged on the deal, citing concerns about FTX's mishandling of customer funds and ongoing investigations. This turn of events not only erased Bankman-Fried's billionaire status, but also prompted regulatory scrutiny. The SEC and CFTC were reported to be investigating FTX and its connections to Bankman-Fried's other holdings. The aftermath was swift and severe. On November 11, 2022, FTX, Alameda Research, and over 130 affiliated entities filed for bankruptcy. Anonymous sources alleged that Bankman-Fried had transferred at least $4 billion from FTX to Alameda Research without disclosure, including customer funds ostensibly backed by FTT and Robinhood shares. The chief executive of Alameda Research, Caroline Ellison, reportedly informed employees that FTX had lent customers money to Alameda, exacerbating the financial turmoil. Facing intensifying pressure, he resigned as CEO of FTX on the same day of the bankruptcy filing. John J. Ray III, known for his role in recovering Enron assets, immediately stepped in as his replacement. FTX and related entities sought bankruptcy protection in Delaware. In the subsequent fallout, Bankman faced questioning by the Royal Bahamas Police Force, and FTX's general counsel, Ryan Miller, was accused of pressuring him to declare bankruptcy. In his prepared testimony for the House Financial Services Committee, Bankman-Fried maintained FTX's solvency, alleging external pressure to initiate bankruptcy proceedings. Despite his initial plans to testify before the committee, his arrest and imprisonment led to John J. Ray III taking the stand in his place. So, despite cultivating a public image as an approachable figure, often seen wearing nondescript clothing and championing philanthropic values while marketing FTX, Fried's personal lifestyle, told a different story. While garnering less attention, his residence in the Bahamas showcased a lavish side that contrasted with the understated persona he presented to the world. The end of fame. On the fateful evening of December 12, 2022, Sam Bankman-Fried's world came crashing down as he was apprehended in his New Providence, Bahamas apartment by the Royal Bahamas Police Force. The arrest, a mere day before his scheduled appearance before the U.S. House Committee on Financial Services, sent shockwaves through the financial and cryptocurrency spheres. Despite the impending extradition to the United States, Forbes managed to obtain and publish his prepared testimony, giving the public a glimpse into his defense. Earlier that day, the Southern District of New York dropped a legal bomb, charging Fried with an array of offenses including wire fraud, securities fraud, and money laundering. Philip Davis, the Prime Minister of the Bahamas, emphasized the shared interest between the Bahamas and the United States in holding accountable those associated with FTX, who may have violated public trust and the law. Speculation arose about potential prison sentences, with legal experts suggesting years or even decades. Following 10 days at the Fox Hill prison in Nassau, Fried consented to extradition, agreeing to face the charges in the United States. Remarkably, he secured freedom on an unprecedented $250 million bond, the largest ever set in an American criminal proceeding. Conditions included residing at his parents' home in California. On January 3, 2023, he entered a plea of not guilty to the charges of fraud and related offenses. However, his legal journey took a tumultuous turn on February 1, 2023, when Judge Lewis Kaplan tightened bail conditions. The judge forbade Bankman-Fried from contacting current or former employees of FTX without attorneys present, deeming such contact a material threat of inappropriate contact with prospective witnesses. The notion that he might be jailed pending trial loomed in the backdrop. February 23, 2023, brought further legal turbulence with 4 additional criminal charges, primarily focusing on Bankman-Fried's involvement in more than 300 illegal political donations. A subsequent March 2023 indictment alleged that he and others had orchestrated the transfer of at least $40 million in cryptocurrency to Chinese government officials to unfreeze Alameda research accounts. Notably, a campaign finance charge filed against him was dropped in July due to treaty obligations tied to his extradition. In August, another illegal campaign finance indictment hit Bankman-Fried, accusing him of using $100 million in stolen funds from FTX customers for U.S. election campaign contributions in 2022. The court drama. The courtroom drama surrounding Sam Bankman-Fried reached its climax as the verdict was delivered. Guilty on all 7 federal charges, including wire fraud, securities fraud, and money laundering. Throughout the trial, the jury was immersed in a sea of testimonies, with key figures from FTX's past taking the stand. Former CTO Gary Wang, ex-head of engineering Nishad Singh, and Caroline Ellison, among others, shared their accounts, presenting a damning narrative against Bankman-Fried. Ellison's testimony, in particular, painted a vivid picture of his alleged directives to utilize customers' funds for repaying loans, revealing an environment where decisions often rested squarely on Bankman-Fried's shoulders despite concerns raised. When the accused himself took the stand in his defense, he faced a relentless cross-examination from prosecutors. In an attempt to salvage his reputation, Fried asserted that he had acted in good faith, acknowledging mistakes but emphasizing that, as CEO, he only held partial responsibility for decision-making. The spotlight also fell on his previous statements, including social media posts proclaiming customer protection as a top priority for FTX. After a month-long trial that dissected the intricate workings of FTX and its founder's role, the jury deliberated for less than 5 hours before delivering a resounding guilty verdict. the potential consequences loom large for Bankman-Fried, with a cumulative maximum sentence of 110 years in prison. Bottom line: while it's unlikely that the judge will impose the maximum statutory sentences, 20 years for some charges and 5 years for others, the severity of the verdict marks a turning point in the legal saga of Sam Bankman-Fried. The once influential figure now faces a future defined by the consequences of his actions in the world of cryptocurrency and finance. Thank you for tuning in to another compelling episode of Stories of Traders. We hope you found inspiration and valuable insights from the fascinating tales shared today. If you enjoyed the video, don't forget to give it a thumbs up, share it with your trading community, and if you haven't already, hit that subscribe button to stay connected with our future stories. Comment "I subscribed" to receive a personal thank you. Remember, the financial world is full of twists and turns, and we'll be here, bringing you the real, unfiltered stories that matter. Until next time, happy trading, and may your portfolios thrive. This is Stories of Traders, signing off. Thank you for tuning in to another compelling episode of Stories of Traders. We hope you found inspiration and valuable insights from the fascinating tales shared today. If you enjoyed the video, don't forget to give it a thumbs up, share it with your trading community, and if you haven't already, hit that subscribe button to stay connected with our future stories. Comment "I subscribed" to receive a personal thank you. Remember, the financial world is full of twists and turns, and we'll be here, bringing you the real, unfiltered stories that matter. Until next time, happy trading, and may your portfolios thrive. This is Stories of Traders, signing off.